How's it going, folks? Long time no see. Let me know if you can hear me, and I'll get started. And I'll give people a few minutes to hop onto the live stream. I know there's the Euro final right now, so I don't expect the stream to gather that many live viewers, but it's all good, you know. I mean, I make this content so that people can watch this 3 days from now, and it'll still be valuable. So, you know. Today I'll cover my next moves on Terra, right? So what I've already done so far, as well as give just my general thoughts about the market, and as always, do the AMA. So let me know if you can hear me. Okay, sounds good. All right, so let's get into the presentation. My next moves on Terra. So I guess just a starter. When the markets are kind of going sideways, it's just a good time for you and I to just like learn about different ecosystems. And as I was studying like Phantom, Avalanche, all these random chains, I figured, I just thought that Terra is the place to be in terms of farms, right? And the cool thing about the Terra ecosystem is that you don't even have to be like uber bullish like Luna the token. You can still like farm Delta Neutral and just like farm with stablecoins. So that's what the video is gonna be focused on. Even though I am bullish Luna. Okay, sounds good. That being said, before I get started, I want to thank anyone that contributed to my gitcoin grants. I raised a little over $4,000. I've already purchased a new microphone. It hasn't arrived yet, so I guess the next video I'll upload will have much better audio quality. And I know I live near a train station, so sometimes you can hear me, hear the train, but the new mic should alleviate that. And I'm not going to bore anyone with like my vacation, but it was kind of refreshing to just not look at the charts and like see what's going on for like a week. I was in Hawaii for 5 days, and I just like wasn't really paying attention to markets. And I came back to like Bitcoin being at the same price. I know like other coins just like pumped and dumped and all that stuff, but essentially like I left when Bitcoin was 34K. I came back when Bitcoin was 34K, and it seemed like everyone was calling for a crash. Standard crypto Twitter stuff, right? And I recommend anyone just get a Twitter account and just like follow a bunch of people, because it's a good way to gauge like market sentiment. Because like, I mean, at the end of the day, Bitcoin looks like this, right? I mean, Bitcoin is the king of the markets. It rules the markets. Everyone gets bullish up here and everyone gets bearish down here. And that's been going on for the past 2 months. And at some point, like the bears or the bulls, like one of them are going to be right. Because like it's not gonna go sideways forever. It's gonna break up or break down at some point. So it is what it is right now. It is what I call a crab market, right? Channeled a term coined by Don Alt, the duck. But so far, I mean, my thesis has been sideways market. Let's farm with stable coins and like less volatile assets and just outperform the market, right? Because any stablecoin farmer has outperformed the market in the past 2 months. So congrats to everyone. But today I want to make an announcement, I guess, that I did purchase some Luna tokens. I'll go over why and how I'm deploying that. But my thesis is that, like I said, crab market won't last forever. So I'm just like slowly deploying the cash that I've been farming with. And I guess like if you think about like something, let's hypothetically imagine a really good farm with 120% APR calculated monthly. Meaning that 12 months, that means 10% a month, right? Which is really good. It's like just much better than anything in traditional equities in the traditional market. But like 120% over a year, how does that compare to like buying Bitcoin and having it like go up to 6 figures? Like I'm not calling for 6-figure Bitcoin in under a year, right? No one can predict the markets, but sometimes like farming stablecoins is good, but there is merit to just like buying something that you think will go up. But that doesn't mean like farming stablecoins is bad, right? I mean, there's always something positive about just having some cash, right, to be farming with, because you can sleep better at night and you can always have dry powder to buy the dip. But like I mentioned, I bought some Luna. And if you haven't checked out my video that I published last week on July 4th, I did a collaboration video with Pete from Terabytes. I did a overview of the general ecosystem, the opportunities available, and let's get started on what I'm doing, right? So before I got on vacation, with the stable coins, I was farming Define tokens, right? I think I left when I had like 60-ish tokens, and I came back to like 90 more defined tokens, right? It's always nice to like come back from vacation and like having more tokens. But as you can see, under popular forums, you see that UST USDT is a liquidity pair on Define, meaning that you can like literally buy UST, right, which you need for the Terra ecosystem, right? You can't port over ETH or Bitcoin to Terra just because it's a different chain. I believe Luna is also on Define, so what I did was I took all my stablecoins and I swapped it to Terra, to UST on the Polygon ecosystem through Define, because if you were to like port it over to Ethereum and like buy UST on Curve or Uniswap, you have to like pay fees, and I don't want to do that, so I just did all the swaps for like 0 fees on Matic here. So you know, I ported over all of my stablecoins that I had at the time. As you can see, it's like 16.4K. I did it through the Matic bridge. It took me like half an hour. It was pretty fast for like little fees, which is nice. And after that, I went to bridge.terra.money, and I just ported over all my UST to Terra. And I think gas was like 10 to 15, but I was able to do this for like $1 in transaction fees. I don't know why it was so cheap, but you know, it was really cheap. So it was actually a pretty seamless experience. I thought I'd have to pay like multiple Ethereum gas fees, but I didn't really have to. That being said, for the newbies, the Terra pros know this, but you have to download Terra Station. This is like the MetaMask for the Terra ecosystem. It's pretty good. It's really good. It's like it has like a dashboard and stuff. The Terra Station dashboard has like all the histories and like you can stake it and stuff. But I mean, I'm not gonna go over all those details. But generally, this is like the overview of my strategy. I'm gonna start out broad and then focus, I guess, narrow it down over time throughout the presentation, where you know I put it over a little over $16,000 in stablecoins. I'm going to convert some of that to Luna, right? To B Luna, to be specific, to put into Anchor, right? Because you need to put B Luna as collateral to borrow on Anchor. Then I'll borrow whatever safe amount. I'll deposit remaining whatever I have stablecoins into Anchor to earn 20% and get AUST. AUST is, I guess, the claim to whatever like dollars you have into Anchor, right? It's like when you deposit on Aave, if you deposit Bitcoin to Aave, you get like ABTC tokens, right? It's just like a claim on whatever you deposited. And the AUSD I get in return, I'll use that as collateral to short farm on Mirror. I'll go over why I'm not doing the delta neutral strategy and why I'm not long farming later in the video. But I feel like the general question I'll get is like, why aren't you staking Luna? Because I talked about it in my video with Pete that, you know, staking Luna gets you airdrops, and you know, you also get more Luna because of staking rewards, right? I figured that I'll get better APYs on Anchor, so I'm just taking advantage of the Anchor APYs for now. And right now, I took this screenshot yesterday, it might be different, but the staking return on Luna is 7.3% a year, right? Obviously, this goes up and down as like the price of these tokens go up, but this already includes like the weekly airdrops that you'll get for Mirror and Anchor, as well as like the rewards and stuff. And I can easily outperform this on Anchor, even though I am taking on a little bit more risk, which I'm okay with. But if you do want to stake on Luna, on Terra Station, here's like my recommendation. I guess not financial advice, but like here's what I would do. Because if you go to like the delegator tab, there's like a bunch of these people that you could be staking with, but it's kind of confusing, right? So generally you want to stake with someone with 0% commission, or it's very low commission with 100% uptime. So there's like your rewards won't get slashed. And the number one validator is Orion Money. 6.3% of voting power is there, and this is because Orion is a protocol, and they're essentially allocating some of their Orion tokens to stakers, right? If you stake with Orion, you'll get airdrops, which is nice. And Orion is like a DEX aggregator of Terra. I haven't looked too deep into it, but you know, it's cool because like, I mean, staking Luna gets you airdrops, which is nice. It's like another form of yield, right? Obviously, it raises the question of like, well, if everyone stakes with Orion, like it's not really decentralized, right? Because I mean, all the voting power goes there. So to disincentivize people to stake on Orion and to incentivize people to go elsewhere, Do Kwon, who is the founder of Terra, said that the Nebula airdrop, which is the I guess algorithmic ETF protocol, those airdrops will go into people that are like supporting validators with less voting power. So and yeah, like I said, it's like an algorithmic ETF, which is like pretty interesting. So for example, I went over this with the video with Pete, but perhaps like number 3, let it roll cluster, right? Like it's an ETF that takes the top 5 performing assets over the last 30-day period. So you're just owning the winners, right? So it's a pretty interesting idea. So what I would personally do if I were to stake on Terra Station is that I would take half my Luna stack, put it on Orion to get those airdrops, and then the other half I'll stake it with some other validator with maybe lower fees to get the Nebula airdrop. And the APR shouldn't change that much, but it's kind of diversifying who you're like staking with, and you're just getting different airdrops, right? Okay, and obviously, I don't know if you can see, like the text is really small, but I mean, these are all the protocols that are going to be launching soon on Terra, and they're all going to be doing airdrops, from my understanding, as long as you're staking Luna on Terra Station. So, if you're like working a full-time job, you don't want to deal with like liquidation price and whatnot on Anchor, then this is like a pretty hands-off way to just get free airdrops and just good APYs in general. Okay, so why Luna? So why am I putting my Luna on Anchor? Well, like I said, Anchor gives me better rates, so I'm just going to take advantage of it while it lasts. Took the screenshot yesterday, and at the top right, you see the net APR is 93%. So this is how much I'm going to be paid to borrow if I use Luna as collateral and borrow stablecoins against it. You see that the borrow APR is roughly 17%, so this is the interest rate I'm paying, but the protocol is going to reward me with 110% of Anchor tokens, right? So, I think we were all spoiled in April and May when Matic and Aave, they were like paying us to borrow, and we were like, oh my god, free money everywhere. But this is another form of free money. Obviously, it's more risky because the only collateral available is B Luna, which is a lot volatile than like stablecoins or Bitcoin, and Luna is like the only collateral that they have right now, but they're gonna expand this to ETH and stuff and other assets. So this is the general overview of the strategy, but let's get into it deeper. So I started with $16,500 of UST. So I just like decided to take a round number, 6.4K. So I have $10,000 of UST, and I converted that to Luna, right? B Luna, and I'm gonna borrow a safe amount of UST. Then after I take out that loan, I'll take that loan and $10,000 of UST and put it into Anchor and earn 20%, right? So 11.5. So I borrowed 1.5K, so $11,500 into Anchor, and like I said, I'll get the AUST in return, and I'll use that as collateral on Mirror to short farm. So a quick tip that Pete mentioned is that if you go to terraswap.io, you can actually like swap Luna for like a lot more B Luna, just because when you unstake Luna, you have to wait 21 days to like get your Luna back, and some people are okay just paying up to, I guess, get their Luna immediately, right? Swapping their B Luna for Luna. Obviously, like I have to like wait 21 days if I want to unstake, and I'd have to pay a premium to get back to Luna if I want to. But if you're converting Luna to B Luna, it's better to do this than like just taking the 800 Luna that I had and just bonding it on Anchor. So here's a little, I guess, quick tip, Alpha. I mean, I earn like 3.5% more Luna tokens, right? Which is like obviously nice. And I took this B Luna, right, that I had, and I just put it all into Anchor, right? And using that B Luna as collateral, I'm borrowing $1,500 against it. And my liquidation price for B Luna is 3.625. And this is, I mean, I find this unlikely given that I think Luna is a little over $8 right now. And I don't think this is going to happen overnight, right? If Luna is like dumping, I'll like repay my loan or like add more collateral. So, I personally feel fine with this. And you see the transaction fees is like $1.676 USD. So it's not as cheap as a Matic, but it's cheaper than Ethereum. And I think the APRs make up for it. So I'm totally okay doing this. So I'll show my dashboard later, but here's just like a screenshot of like what my setup is. I guess after I bought Luna, it went up. So I have roughly $7,000 of Luna, borrowing $1,500 against it. And I'm on the $1,500, I'm being paid 87%, right? Roughly 90% to, I guess, borrow, right? Getting paid to borrow. You just have to be more careful with like how much you're borrowing, just because Luna is a volatile asset. And in May, it went from $22 to like $5 in like a week. So you know, these things can dip a lot just because it's an altcoin, right? At the end of the day, I mean, Luna, I like the token. It's a pretty high market cap, but you know, nothing is safe when Bitcoin is dumping. And like I mentioned, $11,500 depositing it on Anchor, and yeah, and earning 19.5%. And my expected interest, if 12 months from now, if I keep it in here, I'd have over $2,000 in interest, which is nice. And as you can see, if you go to my wallet, there's $10.8 thousand AUSD. It's less than 12.5 because AUSD is appreciating against USD just because it's earning 20% a year, right? So 10.8K of AUSD is the same thing as $12,500. So keep that in mind. And I guess I'm not gonna go over this, but you can only short. You can only short I guess an asset on Mirror when the markets are open, meaning like for me like 6:30 a.m. starting 6:30 a.m. on Monday. So I haven't been able to do this yet, but you know, I'm gonna just short, and I'll show the dashboard later so you have a better understanding. But you know, I think this is pretty capital efficient if you think about it. Like I started out with a little over $16,000. Now I deposited like $7,000 of the Luna. I borrowed 1.5K against it, which is earning me 90%. Then on top of the 90%, I'm putting that into Anchor, which is going to earn me 20%, right, on 11.5K. And with the AUST, I'll use that as collateral to short farm and be paid 30%, right? So I'd have to do the math on like how much I'm earning in total, but like this is pretty good, right? This is a pretty good farm, which is mostly centered around UST, right? So like you don't even have to be like super bullish Luna to like do this. You can just take UST. Like you can skip step one where I bought Luna, where maybe you don't want to like borrow against it. You just put everything into put all your UST into Anchor, use AUST as collateral on Mirror and short something, and do a delta neutral strategy. There's so much things you can do, and hey, like I think this is a pretty good stablecoin farm. And me personally, I think this is better than anything that Matic offers right now for stablecoins. Like I always mention, I am not a Polygon maxie. I just happen to be on there because it had the best yields. I'm a yield maxie, where I just want to deploy my capital where there's the highest yield with like little risk. And I see little risk in this outside of like the borrowing aspect. And I think Terra is like a developed ecosystem where there's like a little chance of rug, not financial advice. That being said, I'll just briefly go over like all the apps, Anchor, Mirror, etc. And then I'll look at the chat for questions if you have any. So you have to reload. But essentially this is my setup on Anchor on the Earn tab, like I mentioned. Okay, so like obviously like I had like 11.494K, or 11,494, but over time. I did this yesterday, but it's appreciated a little. And I guess I foreshadowed that I'll be entering Luna, so like congratulations to anyone that front ran me. I think Luna was like $6 when I left for vacation. I came back and I had to buy it at $8. I'm like, god damn it, but it is what it is. So congrats to anyone that front ran me. So what I have here is, this is Luna, right? This is how much Luna I have. So I'm slowly deploying my stablecoin stack, just because, I mean, like a staking B Luna allows me to take out this loan, which I'm being paid 87% for, right? And if you go to the government, and this is like the bond, right? So if you didn't use TerraSwap, then if I had like 800 Luna, then I can only take like 800 B Luna, right? So, which is less ideal. And with the Anchor, I already have like almost 2 Anchor tokens. I did this like less than 24 hours ago, which is like pretty nice. Like I'm earning rewards. You can either take that Anchor, you can stake it, earn 5%, or just be an LP. I'm not sure what I'll do yet. With my Anchor and Mirror tokens, I might just like convert it to Luna, just so I can stack my Luna tokens. Maybe the thing I'll do is like I'll take all my rewards that I'm getting and I'll convert that to Luna, and then I'll stake it on Terra Station to get the airdrops. That might be something I'll do. Haven't really decided yet. I just came back, so but this is like a pretty good like money making machine, I guess. And the only risk right here is like me being liquidated, right? So if the price of Luna gets to 362 like overnight, then I'll get liquidated and I'll be a meme, and I'm totally okay with that. Okay, yeah, and Terra swap, see, like if you go to Terra swap, you can earn like 4% more B Luna, which is pretty nice. So essentially, so this is Mirror.finance, right? I went over this in the video, and essentially you can be paid to, you're essentially being paid in, I guess, swap fees and mirror tokens. And if you want to long farm it, you kind of just have to be an LP, right? You have to provide liquidity, 50%, okay, maybe not GameStop, maybe like Airbnb, right? Provide like, if you provide like 5 shares of Airbnb, then you have to provide this, like a same dollar amount, right? So you're just being liquidity provider. There is risk of impermanent loss, but like, I mean, it's stocks, right? It's stonks. Like, it's not going to go up like 50% in a day. And these assets outside of the meme stocks, they're like pretty not volatile. So I wouldn't be too worried about impermanent loss. And I guess like, yeah, and the short farms are also pretty good. And I guess like the question people might have is like, why aren't I doing the delta neutral strategy, right? Where theoretically I can like long $2,000 worth of gold, right? Earn 29% and short $2,000 worth of gold and earn 80%. So I don't really care if gold goes up or down, right? Because I'm delta neutral, right? Because I'm shorting and longing the same amount. I would just be capturing roughly like 110% APY or APR. Yeah, this is APR. It's not auto compounded. And the reason I'm not doing the delta neutral strategy, the reason I'm only shorting it is because I already own a bunch of these tech stocks on my brokerage account. So, and I own a bunch of like index funds. So like, I don't really need to be delta neutral on Mirror. I can just short it here and just like be delta neutral between Mirror and like my brokerage account. However, I might like seeing this, like I like ask myself like, why do I even own stocks on like a brokerage account? Like I'm not earning any yield. Like I should just, if I want, I own some Apple. Like why shouldn't I should just like long farm Apple, right? Because like Apple is like, it's just like generally trends up over time, and like I'm not really worried about impermanent loss, and I can just like long farm it. And the cool thing about Mirror is like, as an American, I don't have access to I don't have access to Galaxy Digital. This is Mike Novogratz's company, and I'm actually really interested in this stock, or I believe I don't have access. So I might just long farm Galaxy just because I like what they're doing. And if you think about it, like the majority of Mirror users, I believe, are in Asia, because if you think about like stonks, like this is like the ultimate Ponzi, right? It just like goes up over time just because the money printer go burr. And this is like the main reason Americans have money, right? Americans are like wealthier than normal just because Americans have access to like tech companies, which just goes up over time. So if you think about like product market fit, Terra has like this Chai payments app, which is used by like, I believe 2 to 3 million Koreans every single day. And I believe roughly 10% of all transactions happen on the Chai app. And what Do Kwon wants to do, like the founder of Terra, is he wants to integrate Anchor and Mirror into the Chai app. At least in my opinion. I don't think he mentioned it, but I mean, I think that's the ultimate goal. So if you think about like this app, like a mobile application that lets you pay merchants with it, right? And it also allows you to have 20% APY on like dollars, right? It's a savings account, and you can also like buy American stocks with it. Like that's the definition of product market fit. So that's why I'm like generally bullish on a macro scale, like the Luna ecosystem, and like why I'm okay like buying Luna tokens, just because with Luna, like my friend told me about this at like 25 cents. And I'm like, no, fuck this. Like this is a pawn. Like this is a scam. Or I just like didn't really look into it. Like it was like, I'll go stablecoin. Like screw that. And then it went to like $20, and I'm like, damn, I missed 100x. But you know, at $8, I got in like at 750 ish. I forget, but I feel okay buying it. That being said, I'll look at the chat and answer any questions that might have. I think the presentation and like this overview kind of covered it. And if anything, the video with Pete from Terabytes also does it well. And I'll also go over other resources, I guess other content creators that I think is really good. Okay. Yeah, generally like something cool about Define is that It has UST, and I think it has Luna. I'm not sure how much liquidity it has, and this thing only has $11.5 million of liquidity, so I had to pay some slippage, but you know, it definitely beats it definitely beats paying Ethereum fees for sure. Yeah, and the reason that Mirror pays you so much to short is because, I mean, the Mirror tokens, these synthetic assets, have a premium, right? So the Gold Trust IAU has a 2% premium, right? It's 2% higher priced than like what it actually is, right? On the stock market. So it's like trying to incentivize people to short it just so they can bring the premium down. And you know, if I'm gonna be paid 80%, then like why not, right? Like, who cares? Let's see. Where's the farmer hat? If I wear the farmer hat all the time, it kind of loses its, I guess, like mystique, right? I'm only gonna bring out the farmer hat when, you know, I'm really excited. I mean, I'm still super excited about this, but you know, I can't wear it every single video. It kind of loses its power, right? Because right now, like, I bring it out like maybe once every 2 weeks, and everyone's like, "Fuck yeah, there it is." One thing I mentioned is that these long farms, they're APRs, right? So it's not auto compounded, right? And let's see. So for example, like Airbnb, it's 53%, but it's not auto compounded. So it would be really cool if there was an auto compounder, right? And there actually is one. It's called Spectrum. It's not audited right now. And I talked to a few people, and they said, like, I guess like Luna experts, and they were like, yeah, I'm not gonna touch this until it's audited and until like it's, I guess it has like more clout and more like Lindy effects. But you know, right now, I mean, these APRs are pretty good. I mean, Google, like, I can be paid 600% APY to be an LP, and like this definitely beats holding Google in my brokerage account. Obviously, it's gonna go down like once it's safer, right? Once it's audited, more people will put their money in it. But this is something that I'm watching, right? Like for example, like I own like a bunch of Apple stock. Like I might just sell all that and just put it into Mirror and just like farm with it. Because I mean, why not? Fidelity ain't doing shit, and like Robinhood ain't doing shit to like give me money or like paying me to like use their application. And this is like the general power of these crypto protocols, DeFi protocols. It's like they want you to use it, and they're willing to pay you their governance token. And I guess also like if you earn Mirror, you can stake it. Pretty good, pretty good. Yeah, I don't own anything, but yeah, these farms are good. Have I looked into Pylon? Not really. I know like some Twitter shills are talking about it, but I'm just focusing on these two protocols right now, just because like this is like what I feel comfortable talking about. Why are you looking to stake ETH 2.0 when you acquire 32 ETH? Why risk locking in your capital? Yeah, I mean that's a valid point, but I mean I don't even own even close to 32 ETH. But once I get there, like I just see that as like my forever bag. I just want to stake it and just forget about it, right? I think it's always good to just have like Bitcoin in like a cold wallet that you like won't touch. It's just like it's just something that you like forget about. And if I were to successfully accumulate 32 ETH, I would think about it that way as well. Okay, that being said, it seems like not that many questions are being asked, so I'm just gonna go into the AMA. I guess before I get into the AMA, actually, I'm still in this Bitcoin farm, or this Curve farm on my Bitcoin, right? I have like 15, like all my Bitcoin, it's still in Curve. Obviously, like this isn't that great, right? I'm earning like 5.6%, 5.8%, right? Which is okay. I mean, I can't really get that anywhere else, but I'm looking into this now, HY crypto, and people don't want to touch this because of like the risk of impermanent loss, but like, and like I didn't want to touch that like while I was on vacation because I wasn't able to manage it. But like now that I'm back, like I'm probably gonna go back because this is like what 27% APY, just for like being a liquidity provider, Bitcoin, ETH, and stablecoins. It's pretty good because at the end of the day, like Bitcoin, ETH, here. So this is a impermanent loss calculator. I went over this on like I guess like my one-off videos a lot, but like the HI crypto pool is like 3 assets paired, I guess in equal amounts. And if Bitcoin were to go up 50% and ETH went up 75%, like you're only taking in like that much impermanent loss. So like I'm sure like no matter like unless something crazy happens where like Bitcoin just goes flat and like ETH just decouples. I mean, even then, like it's still not that bad, right? And if you compare, so let's just take this likely scenario of like if Bitcoin goes up 50%, then ETH goes up 75%. So this is the impermanent loss for the 3 HI crypto pool. And comparing it to like what if you just provide liquidity for the Bitcoin and ETH, and then obviously it's a little bit more impermanent loss just because you have exposure to dollars, right? So when 2 assets outperform, then the pool will sell those assets to buy the underperforming asset, which is the dollars. So I'm probably gonna move over my funds there just because like I don't really see that big of a risk, and the APRs are pretty good. I mean, damn, that's a lot of curve, that's a lot of Matic, and that's a lot of swap fees. Yeah, you can earn more on like Celsius and like BlockFi, but like my general thesis is that like these CeFi and these CeFi companies, like they're gonna have to lower their rates. Like BlockFi, like they used to offer like 6.5% on Bitcoin up to like 2 Bitcoin, and now like it's like 5% up to like 0.5 Bitcoin. It's like what the fuck? Like there's like they just keep lowering rates, and I see that trend just going over time, and I just like the flexibility of having my assets on DeFi protocols. That being said, let's get into the AMA. Thanks for the 40 people that submitted their questions. Let's see. And after this, there weren't that many questions, but after I go through this, I'll look at the chat for questions. So feel free to save your questions, and hopefully I can answer most of your questions here. So I went over this, but like typical gas fees is like roughly $1. I'd say roughly $1. So it's not like Matic where like you can play with like $10 and like it's fine, right? I wouldn't play on Terra with like $10 or even $100. Maybe $1,000 is good enough. But you know the yields like I shared is like pretty good, right? So I feel fine with it. So I get this question a lot, almost every live stream, and I think it's fine to address them just because there's like new subscribers every single time. But in terms of like best farms, for beginners, like if you're a beginner, like you shouldn't go for the highest APYs just because like you're less knowledgeable and you might fuck up, right? Like to be frank. So what I would recommend is like if you're new, just go on Polygon just go on Polygon and like deposit some assets on Aave, right? And just like over the next few days, just like watch your numbers grow. It's like holy shit, like it's actually paying me. And once you're understanding like, okay, like I'm being paid because there's no middleman, there's peer-to-peer lending of money, lending and borrowing of money, like fuck the banks, then you can like borrow some assets against it, right? Like so $1,000 in Aave, borrow like $500 of stable coins, and like holy shit, like I didn't have to like even talk to anyone on the bank. Like I just took out this loan and then take those dollars and like put it into like a stablecoin farm, right? Like an LP farm, and be like, okay, like this is how I provide liquidity, and this is how I like earn these governance tokens. And over time, you're gonna like slowly learn like, okay, like this is how things work. And as long as you use these protocols, it'll help you like assess like how good future projects will be. I mean, yeah, I mean, like I think the best way to like learn about DeFi is like to use it. So I would just like start really conservative, and then as you learn, just expand your risk horizon. So like I mentioned, you can purchase UST on Polygon for 0 fees essentially. So I would do that instead of like trying to do it on Ethereum, just because gas fees are kind of expensive. So multi-part question. If you stake it on Terra Station, you can't use them on other platforms, right? So if you stake it on Terra Station, you can't like bond the B Luna to on Anchor. So that's why I'm like focusing on Anchor right now. And I kind of went over this. Like I just compared the numbers and I said I can outperform Terra staking, Luna staking just by being an Anchor. So just do the math, and it's not too difficult. I just do that. Yeah, so I don't do price predictions because I think price predictions are full of shit. But I see I am like long-term bullish Luna, and I feel fine just like owning some and like using it as collateral and like doing all these farm strategies. Just because Luna is like the only crypto that has like a real-world use case, right? Like, yeah, like Luna, like it's actually used by millions of Koreans, and like Mirror is used by like a bunch of Asian people, just because there's like people don't have access to like US stocks. And the idea that there could be a mobile application, right, that could be used for, I guess, e-commerce and like retail payments, that also has integrated like a 20% APY savings protocol, as well as like a synthetic asset trading, I guess, app. I think there's value in that. I think there's product market fit. So I always showed this 20 cents, 25 cents, didn't buy it. I don't mind buying it higher just because I understand it better, right? Yeah, so, I mean, I get this question every single time. It's like, what do you think about my farm token? Like, is it going to go up? And 98% of the time, the farm token just goes to zero, right? I mean, it just makes sense. Like, there's zero utility for the token, and it's the native token that's being paid out in terms of yield. So obviously, it's going to just go down over time, right? Like, and it's like collecting coins in Farmville. You're collecting something that hopefully will have value, right? And I feel like a lot of people, like, they just, like, in every video, I just say like farm tokens go to zero, and like people like get mad. It's like, no, like this farm is different. This farm has burn, right? This farm burns this. It's like this farm burned 1,000 tokens today, right? But I'm like, it also minted like 10,000 tokens today, so it doesn't really matter. And I have a business background. I went to school. I went to business school, and I specialize in marketing. But one of the things that stuck in my head is that, I mean, this isn't like a novel concept, but hope is not a strategy, right? Because this guy's like, hopefully it will have value, right? Hope is not a strategy. It's like, this is a good comic of like, our new strategy is to sell fewer units at higher margins. Question, how's that different from saying our sales stink, so we're cutting costs? I call it a strategy so you won't lose hope. It's working great. And I think this is I think this is like what a lot of DeFi protocols do, right? Like, especially farms, it's like, we have an anti-whale mechanism, we have a deflationary token because we burn things. It's like, we're introducing a new partnership, and it's just like a bunch of like random Twitter posts that like make their whatever farm sound exciting. But at the end of the day, like they're minting like they're just like minting tokens to like most tokens go mint to infinity. Like whatever that they burn doesn't matter, even if they have a capped supply of the token supply, right? It's like it doesn't really matter because long term, like it has no value. Like let's say there's a farm with a capped supply, like you should always ask yourself, like, if I were to enter a 1-year coma, would I ever hold this token? And 99% of the time, the answer is no. Just because, like, what the fuck does this token do? Like, it doesn't do anything. At least with, like, Aave and, like, Uniswap, like, these protocols are generating revenue, and I can see that 10 years out, they're going to be much bigger than where they are now, right? Same goes for Luna. As long as there's utility for UST, the Luna token should appreciate in value, right? So, and I feel comfortable holding Aave, Uni, Luna for like a 5-year time horizon. But like these random farm tokens, like don't fall into this trap of like, like of this like shiny new farm with like a new tokenomics, because 98% of the time it doesn't work. I don't mean to FUD people out of their farms, because there are farms that do last longer. And if you do the research, like those farms can make you a lot of money. For example, Polycat. I was in Polycat in April, and I got out of it after break even because I just didn't see a future. But obviously, like they are like one of the longest lasting farms on Polygon, and anyone that was in Polycat since April made a fuck ton of money. Definitely a lot more money than me. So if you're able to identify those, then go for it. But at the end of the day, it's like all farm tokens are like this, right? It's like they make it sound nice, right? It's like, this is our new strategy. Like we're like doing all these things, but in the back end, it's just another farm, right? And it's probably gonna die. So hopefully, I might have to say this. I might have to address this in every live stream, but there you go. Isn't it's okay? I thought this was like a ridiculous question. I mean, I always say like do your own research, and I say that like if I get rugged, the only person is to blame myself. And I think I'm very careful when I introduce a farm on my channel. When my channel was like less than 5,000 subscribers, I was just like throwing out these random farms because I didn't really have an audience. But now that I feel like I have some, I have a sense of responsibility now that I have a bigger audience. So generally the farms that I'll introduce is something I consider to be pretty safe, right? There is always a chance of rug, and you have to always do your own research. If I talk about something and you get rugged, like, you know, at the end of the day, you're the one that put your money in that farm, right? And I get rugged. The only person to blame is myself, even if like my friend recommends it to me. So, you just have to use your head. What's an upfront cost to yield decent profit from farming? I think the upfront cost is time. You can't just like enter yield farming and like expect to make money. It's like trading, right? It's like you can't just like leverage trade and like expect to make money, right? I mean, maybe you can if it's like we're on this up only bull market, right? If you got into Bitcoin in like August, then like yeah, you can like 3x leverage and you're probably super rich, but you probably don't have longevity as a trader. So for me personally, like I just immersed myself as a farmer, a humble, honest farmer, and I learned these different strategies over time, and I'm a much better farmer than I was a month ago, right? And the goal is just always be better and always go where the yield is and like not be a maxie, right? Just don't be a maxie, just go where the yields are and just be safe about it. Yeah, kind of went over this. So I want to address the second question. It's like, why are people using UST, right? It's like, why are people actually using UST? And from my knowledge, it's because the merchant just gets like less fees, right? Because I own a coffee business, right? I own a coffee business. We do a lot of e-commerce, and we have to use Stripe, like out of necessity, right? This is, if you like buy something online, chances are like it uses Stripe, and Stripe, like look at this. Every time I sell something, like I have to pay this much in fees and transactions, which is ridiculous, right? This definitely cuts into our cost. And I think the Chai app, if you use UST, merchants only have to pay like 1% or something, or I forget the number, but this is a pretty big cost, right? Because if you're doing millions in volume, then I don't do millions in volume. I do hundreds in volume, small coffee company. But this really cuts into the cost. So merchants will easily adopt Terra or the Chai app, like the payments app, just because the fees are lower. And over like obviously like the more sales you do, like those fees add up. So I think that's one of the reasons like there's so much adoption there, because Korean merchants just want to get lower fees. So okay, I also get this question a lot. Like I don't really understand like what's so difficult, but I'll like address it if it's confusing. So like for example, like on Aave, like I have like $20,000 deposited. I borrow like $10,000, and like 2 weeks later, like my debt is gone, right? Everyone's like, where did it go? Like aren't you down money? And like literally, like I took $10,000, I put it into a farm and like, accumulated tokens, and I put it back, paid it back, and like does that not make sense? Like I'm not like, when I take out debt, I'm not like spending it, right? I'm just farming with it. So is that confusing? So that's why that's how I pay back my loans. Yeah, so back in April and May, there was a point to use stables as collateral and borrow stables against it, just because you were being paid to borrow on both sides. But now that the rewards are lower, I don't think there's much value in it. Aave is still really, really good, right? Because yes, the rewards are lower. You're not being paid to borrow, but you do still get rewards, which is non-zero. And if you use like Bitcoin or Ether as collateral, and like you don't want to sell your Bitcoin or Ether, I mean, I can take out a loan for like DAI and like pay like 1 or 2% and farm with it and earn like 20%. So you're still making money. So I mean, it's not like as sexy as it was like a few months ago, but come on, guys. it's fun. Yeah, so define is something that like I think could have future value, right? It's not like it's not like I am farming it, right, and I'm earning it for free, but it's an exchange token, which is like a cross-chain exchange, and I do think that it could have fundamental value. Like I also would not be surprised if it went to zero. So like, like I'm not trying to shill this thing because like, I have no idea, but it's something similar to Cheetah where I was farming it at 30 cents and I sold it near $3. And I think that's something that I'll be doing with DeFi or Define. Like I'll just farm to accumulate. I'm not gonna burn the 50%. I'm fine waiting. And if it goes up, then I'll sell it. Like I'm not loyal to this token. If it goes up, I'll sell. Simple as that. Yeah, so this is something I went over in middle of May, right? When the markets tanked. I said that I am no longer going to be participating in degen yield farms because people got wrecked and the risk tolerance is low. So, and don't get me wrong, there are people that has made a lot of money degen yield farming, right? So like if you do your research and you identify these things, yes, you can. But me personally, like think about it, like people lost half their money, right? And if you're like a high risk retail investor, you might have lost like 70% of your money. If you like didn't hold Bitcoin or Ether, like if you're like all in altcoins, right? Then you just got wrecked. And those people were the ones degen yield farming, and those people have less money to farm with. And if people have less money to farm with, then these farms have a shorter lifespan. And if we are in a bear market, then these developers are more likely to rug just because they can make less money from these farms. So all those reasons are the reasons why I am not degen yield farming right now. Don't get me wrong, if Bitcoin just fucking pumps, like if Bitcoin hits like 60K, like I'll be back in there with you guys, right? I'll probably do a live stream. I'm like, yeah, like I'm in this fucking Ponzi, guys. Let's fucking go. And I'll like I'll go back to being a degen. But right now I'm just being more conservative. I'm like going into these safer farms, which still earn a pretty good yield. I mean, Mirror, Anchor, it's still pretty good. Yeah, so I've had some content creators ask me like how do I get started if I want to make a YouTube channel? At the end of the day, you just have to kind of go for it. It's okay if your content is not good to begin with, because go back to like my very first video. I made it like 10 months ago or something, 8 months ago. Like I made a video on Bitcoin, right? And I was a fucking noob, right? I didn't even know what Ether was, right? I didn't know what DeFi was. I was a Bitcoin maxie that was like making videos on Michael Saylor, making videos on like why money printing Gober is good for Bitcoin. It was awful, right? In hindsight, it's awful. I mean, it's still a pretty good video if I were to show it to a friend who doesn't know anything about crypto, but like who the fuck wants to watch that, right? It's just so saturated. But you just have to be consistent, and you have to find your niche, because I was making like fundamental analysis videos, and which on my best day got like 1,000 views, like 2,000 views, which is like pretty good, but like not great. And my channel caught on when I just started like fucking going ham on Matic, just going degen yield farms when Farmer had. And in hindsight, it's pretty obvious that, hey, like crypto YouTubers, like they mostly do TA, right? They just draw head and shoulders patterns and like draw trend lines and say it's gonna go up. And like I feel like if you're starting at a new channel, the odds of you being successful as like a farming channel compared to like a trading channel, I think a farmer channel is more likely to succeed, right? Because most YouTubers, crypto YouTubers, they're fucking garbage. It's total garbage. They just like pump scams. They talk about meme coins, and like you can kind of see like the quality of these YouTube channels by looking at their subscriber to viewer ratio, right? Because my videos, they get like at least 10,000 views, right? For like someone with like 46K subscribers, it's pretty good, right? That means my audience is engaged. But some channels, they have like 100,000 subscribers, but their videos get 3,000 views, right? It's like, what the fuck? Like those people, they get subscribers through like meme coins, right? And like they talk about like the next 1,000x, which no one frankly gives a shit about, at least in my opinion, because it's not that easy. And like people subscribe because they talk about a random meme coin, but like they're not really engaged. And I think like like I mentioned, like I've shouted out many channels before. If I think their content is good, I'm about to do that in the next few minutes. And like, there's not that many good DeFi crypto like farmer channels, right? Like, come on, guys. Like, I'm sure most of you are fucking pros, and I'm sure most of you guys are degens. Like, let's go. Let's create more DeFi content, because it can't just be me, right? It can't just be me. Do you have any Matic left? No. I just converted most of my assets to Bitcoin and stable coins. Hold on. Yeah, before this question, I'll just talk about this, just because I was on this topic. Like, what are some good resources on Terra? So Terabytes, really good. I learned about Terra through them. I have them to thank for like learning about the ecosystem, and I've had them on my channel. Really good content every week. They have like these tutorials and like these interviews, really good. I also like his channel. He's a little bit undiscovered, but shout out to you, Danker, or Danku R. I feel like he's like some like Luna maxie. Maybe he's not, but like he like does a lot of content about like how do you master Anchor and Mirror, and he like does spreadsheets and stuff. It's pretty good. Next, Joseph Liow on Twitter. He's also pretty good. He's helped me a lot recently. I asked him a bunch of questions, and he has a Medium page where he like talks about like how it works, the state of decentralization, different ways to earn, like very in-depth articles. So I suggest, those three sources. Give them a shout out, right? If you make good content, I'll give you a shout out. All right, let's see. Does farming have a long-term career outlook? Yes. Because there's always liquidity mining programs, right? Because farming, I guess, as a job, yield farming in crypto is a job. It exists just because there's always like new protocols that's like trying to incentivize you to put your assets on their protocol to like bootstrap their application, right? And if you think crypto is not going to die, like I don't think crypto is going to die. There's always going to be liquidity mining programs, because these protocols, they're competing with each other for your liquidity, right? And me, like, I took my liquidity away from Polygon, right, into the Terra ecosystem, because the Terra ecosystem had the best rewards. And I'm not a Polygon maxi. I'm just like, okay, like Terra gives me the highest yield, I go there, right? Like I'm not a complex man, right? I'm a simple man. I'm a simpleton, right? I'm just like, okay, more higher number seems pretty safe, I go there. And I don't think this is going to end anytime soon. And I feel like even as an investor, like you kind of have to use these protocols to like understand like, okay, like does this thing have a future? And using these protocols have given me like a much better understanding of like, I guess like my investment thesis on like different altcoins, right? Simple question, but like if I use Bitcoin as collateral to like mint assets, am I exposed to impermanent loss? No, because, well, if Bitcoin goes up, that means you can, you're not providing liquidity. You're just like, if Bitcoin goes up, that means you can just borrow more. If Bitcoin goes down, you can borrow less, and you might have to repay your loan, or you might have to repay like whatever asset you mint. So, simple question. Yeah, I guess comparing like taking your Luna on Anchor versus like just staking it on Terra Station is like, if you're a busy person, you're going on vacation, you don't want to worry about liquidations, just stake it on Anchor, stake it on Terra Station, come home and like have more coins, right? Pretty nice. But right now Anchor has the higher yield, right? Just because they're paying me to borrow. That's why I'm doing it. Once those rewards like run out, I don't know when they're gonna run out, but if it runs out, then I'll look somewhere else, right? Like I'm not a maxi for any application. I'm just going where the yield is. Have any Telegram groups? No, I don't. I have a Discord group. Link in the description. Last question. What are the best sources of information to use and to study? Well, for Terra, I just shared it with you. I think Bankless is good in terms of like general ETH maxi content. But at the end of the day, the best way to learn is by using these protocols. Would you rather like read a book about like playing a sport, or would you rather play the sport, right? It's like similar to that. Like you might get rugged, you might get wrecked, you might like lose some money, but you know, I think of it as tuition, right? I mean, if you think crypto is gonna be much bigger than like where we are in like 5-10 years from now, then like why not just learn? Because I personally think that me using these protocols, me understanding them, like 5 years from now, like I'll be a lot better off than I am right now. I haven't made it yet, but the goal is to make it. So that wraps up the questions. Let me know. So now I'll look at the chat for questions. I'll answer directly. I'm not going to talk about random shills, so don't ask me. I'm sure most of you will try, but like, I'm not going to talk about some garbage Ponzi that you're a part of. Okay, I don't want to say garbage Ponzi, but you know, you get the point. So for those wondering, the link to this is this, right? So this is the impermanent loss calculator. If you want to experiment with 2 assets, 3 assets, 4 assets, whatever. This is made for like balancer pools, because I know balancer also has incentives, which is pretty good. And I think someone on balancer made this impermanent loss calculator, so more people would use their app. All right. Yeah, how is Hawaii, dude? I eat like a poke bowl every day. Like, I'm Japanese, so obviously I love raw fish, like sushi. I know poke is not like sushi, but I mean, I love salmon. I ate that shit every single day. Like, my girlfriend was like, "What the fuck? Like, this is your like." It's literally like I had dinner at like 6 p.m. and then at 8 p.m. like I got a poke bowl, and she was like, "Oh my god, like, you're gonna take a fat dump in a few hours." I'm like, yeah, definitely. And I did a hike called Coco Head. It's like 40 minutes of like stairs. I almost died, but the view was nice. And I had like the best tonkatsu ever. This place called like Tonkatsu Ginza Biting. It's like what is it in English? Like fried pork cutlet, right? Oh my god. I think I gained like 5 pounds. But it was good. I mean, also like emotionally too, like if you were like just looking at the charts all day for the past week, like you might be like wondering like, what did I just spend my life on? Because the price hasn't changed. And you know, maybe the price is gonna just roam between 30 to 40K for the next month or two, right? And at that point, like maybe it's good to just take a few days off and just like farm with stable coins, go somewhere nice on vacation, and come back to more coins. Because, you know, like me coming back to more coins, right? Like for Define and like Curve and Matic and stuff, it's like, feels good. I'm a sushi maxi, yeah. I'm a sushi maxi in that way. Yeah. Yeah, KuCoin chain, yeah. I was looking at that. I was talking to someone and he said like, there's like a lot of rugs on KuCoin right now. I know KuCoin is just like ripping off BSC. I mean, I feel like a bunch of companies should. I mean, like, why not try it, right? It's just like a moneymaker. It's a money grab. Because I feel like in January or February, people were excited about Huobi Eco Chain, and I looked into it, and it just like went to zero. I think it's like no one went to it, and I feel like KuCoin is going to be similar, right? Because Binance Smart Chain was successful because Binance is the largest exchange, right? I think 33% roughly of all trading volume goes through Binance, which is insane, right? That's like a near monopoly. So if BSC or if Binance is like a direct on-ramp to BSC, like obviously like money will flow there. But KuCoin and like Huobi, like who uses that? Like I don't really use it. I mean, I have an account, I think, but like I don't even really use it. So I don't really think that much money will go there. I'd rather look into like Phantom or like Arbitrum when it launches. Like when the fuck is Arbitrum? Like what the fuck? It's been so long. They were like hyping it up. They're like, oh yeah, like we'll launch in a few weeks, and then we just like don't hear from them. But you know, it is Ethereum. Like Ethereum, when you're in Ethereum land, you should just expect delays, which I'm okay with. Like I'd rather wait like an extra month and like make sure my funds are safe than like launch something early. But just like takes so long. Let's see. Are you purchasing any insurance to mitigate risk? Not really, because I mean maybe I should, but like I don't really use apps that I think I need insurance in. And I feel like insurance is just like it's just like a messed up industry, right? Because if you think about health insurance, like people that are low risk, like for me, for me, like I'm healthy, I eat well, I sleep well, right? And like my insurance costs are low, right? And like I don't really need insurance, right? I'm just like required by law to have it. But if you're like an old person with like health issues, like histories, like you have to pay up, right? Because insurance companies like don't really want to like cover those people. So like for example, like Nexus Mutual, right? The insurance protocol, like they'll cover like the safe apps, right? Because like I mean they're safe to begin with, so like they'll like try to make money by insuring them, right? With those funds, but they're not gonna cover like dangerous applications because it's too risky. So I feel like it's hard to make an insurance model work in DeFi, just because the incentives aren't aligned. So that being said, like I'd rather just like not pay for insurance because I'm like probably using applications where I don't think I need insurance. But maybe I'm just a degen. Who knows? Pickle Finance, 70% APY on stablecoin. Did you listen to my live stream? I'm earning 20% on Anchor, and I'm also earning 90% borrowing money, and I can use Anchor to short farm for like very high APYs, right? Nothing against us. I didn't mean that to sound aggressive, but I'm just saying like, yes, I looked at all those opportunities, and I think that Terra for stablecoins is the best place to be, because these farming strategies, like let's say you give no fucks about the Terra ecosystem, right? You think it's a Ponzi, you think it's a scam, right? But you don't think it's gonna rug. Then like you don't even have to take on like Luna exposure. I have some Luna exposure just because I like the coin, but I have like 7K of Luna. Like let's imagine like you give no shits about Terra, you give no fucks about Luna, right? And you just want to farm with dollars. Well, let's put all your dollars here, right, on Anchor, right, earning 20%, right, 20% to begin with, and you get AUST in return, and you can use that AUST as collateral to short farm, right? And if you're feeling frisky, then you can do a delta neutral strategy, like longing the same amount of assets on both sides. So, like this, I think this is like a better place to park your stablecoins than on Matic right now. Just my opinion. Always your own research. Do what you're comfortable with, and it is kind of a pain in the ass to like download Terra Station and like bridge your assets over. But I mean, it took me like an hour because the Matic bridge takes like 30 to 45 minutes, but it's not too difficult. And I think it's good to like just have funds on like different blockchains that you're like positive on, positive as in like not bearish, like neutral to bullish on, just so you can like. Just so you have funds available to like deploy and everything. Yeah, and I don't. Yeah, like obviously I'm bullish Ethereum, but I just like don't cover Ethereum just because the fees are too high. I mean, there are a bunch of like ETH maxies that like say like, oh my god, like Wi-Fi is so good, and like I mean Wi-Fi is good, but like Wi-Fi only works for rich people, right? And myself included, and like majority of people, like we're not like uber rich. Like we have to work with like what's available. And like those ETH maxis, like they're rich to begin with, and they're not really relatable, right? Just like a bunch of rich white guys saying like, I bought ETH and I love ETH to the moon, $100,000 price target. Like, okay, like fuck you, like I'm gonna try to make it by these farms. That's also like point to like if you want to make content, like just I would like look at what I did, because I think in hindsight, like I didn't know, but like it made sense. Like farming content does well because there's no one covering it, right? Like if you're creating a new channel, like you should cover a niche in the market with like very few people covering it, instead of like Ethereum and like I don't know, XRP or something. Like who the hell is clicking XRP videos? I don't know, but yeah, farming content. because I want to subscribe to more farmers, but there just aren't that many farmers. And like, I've shouted out good channels that I see, right? Like, so if you make good content, like, I'll happily shout you out, right? Obviously it has to be good to begin with, but yeah. Let's create more content creators, right? We need more content creators. Okay, let's see. Yeah, she had $2,000 on Terra. I feel like that's like the minimum threshold given the fees. I mean, I guess $1 fees, it's not too bad, but if I had 2K, I would just probably just deposit here, right? And then do a short form here, because that's not that many transactions. And I mean, it's still pretty good. Like, the annoying thing about like Mirror is like you do have to like pay like $1 every time you want to claim those rewards, right? So that's one of the reasons I hope this thing does well, like Spectrum Protocol, because this thing is like the one that like auto harvests and auto deposits it for you, so I don't have to pay fees. I'll have to pay a performance fee probably, but like this would be ideal. But I just don't know how safe this thing is. Like, let me know if anyone knows if this is safe. Like, I don't know. Like, I'm pretty sure like projects on Terra are safer than the average project on like BSC, but I just don't feel comfortable doing this yet. Let's see. I don't think BSC is dead. I don't think BSC will die. I mean, it's just more of a Wild West. And I mean, if it'll die if like the government like tries to wreck them, but like I don't really see them dying. I don't really cover BSC just because like I'm in the US and like it's technically, I don't think it's legal to like use Binance Smart Chain, or at least like the on ramps are blocked, right? Binance doesn't allow me to withdraw from Binance to Binance Smart Chain directly, and the Binance bridge doesn't allow for US residents. So given that I'm super doxxed, like I'd rather not even like risk like using Binance Smart Chain. I know a bunch of YouTubers use it and like they're like full on American and they don't give a fuck and they're probably fine, but like that's one of the reasons. And yeah, I think Binance Smart Chain has like the highest chance of rug, followed by Polygon, right? Just because like it's so cheap and so easy to make these applications, so like developers are like, you know, this is this is more likely to rug, but that's one of the reasons. Let's see. Yeah. Have I checked out Phantom? I literally did a live stream covering Phantom 3 weeks ago, 4 weeks ago. I go over it in pretty in depth. I go over like why I don't think it'll succeed for now, right? My general stance on Phantom is that it doesn't have a money market. It doesn't have like an Aave, right? And I think every ecosystem needs like a safe, trusted, reliable money market to succeed. Because I think that if Polygon did not have Aave, like they would not be where they are now. It's Polygon. The Polygon craze was started by Aave, and Phantom has cream, but like no one is depositing money in the cream just because like people see it as less safe. And maybe it is safe, right? Maybe it is safe, but it doesn't matter because the market doesn't think it's safe, and the market is not going to put their liquidity on cream. So this is like my thesis. And I guess Anchor is kind of like a money market, except that like obviously like it's not really capital efficient, right? Because I put 7K as collateral and I only feel comfortable taking out this much, right? Just because Luna is so volatile. I mean, look at this, right? If you look at this weekly chart of Luna, it's like it already dumped so much. How can it go down any further? But like I mentioned, I was recommended this at 25 cents like less than a year ago. So think about all the people that like hold this token. And if you put it on log scale, like holy shit, like literally on January 4th, this thing was like at 65 cents. So, you know, these people are up so much, and like goddamn. Yeah, I was told yeah, I was told about Luna at like in September, October. I'm pretty upset, but you know, hindsight is always 50-50. Oh, nice. Oh my god, every time I do a live stream, the markets are up. Damn, it's crazy. It's nice. Yeah. If you the Bitcoin chart off of linear scale weekly just looks so bad. Like, look at this. It just looks like it burst. The bubble burst. I don't know though. I'm not here to speculate. I'm just here to be a humble farmer. Anyways. I literally just talked about Spectrum. I don't know if it's legit. I'm waiting. This is TradingView. TradingView.com. It's pretty well known. Let's see if there are new questions. Anyways, I've been live for how long have I been live? Let's see. Oh shit, I've been going on for pretty long, huh? Okay. 71 minutes. Awesome. Okay. Any last questions? I'll probably wrap up the stream soon. Yeah, just ask your questions and hopefully I can answer them. Congrats to the Italians. I'm sure the Brits are fucking pissed. They're probably like trashing the streets right now. Like, they're probably like throwing beer cans like on the street out of anger. The Brits, they're crazy, man. They're crazy. Am I still bullish on the Matic token? Not particularly. I mean, I had a great time farming it in April and May, but I'd rather... I mean, I'm bullish Matic, the ecosystem. I think it's still a really good place to be in. Excuse me. But I'd rather own stablecoins, Bitcoin, or ETH right now. I guess I purchased Luna, so I guess I'd rather own Luna as well. Me personally, like, but yeah, I mean, nothing wrong with Matic. I mean, Matic. Look at this, right? I mean, holy shit. Look at this. Up only. Okay. What bridge did I use? Well, go back to... Well, I guess you can rewatch it from the beginning, but I talked about... I converted my stablecoins to UST on Define, the Define exchange on Polygon, DFYN. Then I just bridged Polygon to Ethereum, then Ethereum to Terra. I paid like a few dollars in transaction fees. So, you know, it's pretty nice right now because gas fees are super low. It's like pretty worth. Anyways, okay, I'm gonna wrap it up. Thanks guys for tuning in. Thank you anyone that watched my live stream over the World Cup, or sorry, the Euro Cup. I guess Italy won, so I'd have to watch the highlights. It's good to be back. Yeah, I'll probably be making like Matic content, Terra content, and yeah, I guess. Yeah, I'm still kind of out of the loop because I just came back like a few days ago, so you know, I'm just like sitting comfy on Curve and Terra right now. And you know, if the market sentiment changes, maybe I'll go into degen farms. You know, I know a lot of people want me to like do a live stream of like me getting into a Ponzi. I mean, that sounds pretty fun, so I'll probably do one. But I mean, I don't think this is a marketing edition to do that right now. So But there's always an opportunity, and if I get rugged on live stream, then that's really good content, right? So thank you guys for watching. Have a good day. Let's see. Yeah. And yeah, let's wait for Arbitrum to launch, because I think when Arbitrum goes live, the ETH layer 2, transaction fees are going to be higher, like a few dollars, I think, like $1 to $3 or something. But I mean, the liquidity mining programs are going to be insane. So yeah, I'm excited for Polygon. I'm excited for ETH layer 2, right? Because Optimism is also supposed to launch this month, right? Optimism and Arbitrum supposed to launch this month, and then Terra, also good. So there's a lot of opportunities out there. It's hopefully I've been a useful resource for you to deploy your capital. I got Luna at 7.5, which doesn't really matter. But anyways, that being said, thank you guys for watching. Have a good one.